Riches are coming for you and your family if you play the long game and you leave emotions out of it. Take a look at this video I made 6 months ago. It is titled, Market Crash Will 100% Cause the Squeeze. Full details you need to know. And that's basically what we're going to go over here again in this video. Why every single day the stock goes down and the markets act irrational. We are getting closer and closer to actually seeing the Moass. And the price action we've seen in AMC stock confirms what I am saying. AMC only down less than 3%, whereas Fubo down 4%, SoFi down 4.5%, Lucid down almost 5%, Affirm down 8%. I could go on if you guys want me to. Now, the problem here and what I'm really seeing is a lot of other creators are really speaking out of emotions. Maybe it's because they have not been involved with a trade like this, or maybe they don't know enough about the macroeconomics of a short squeeze. It's not about what the price action of the stock is actually doing. It has nothing to do with the stock. Keep that in mind. It has to do with what is going on around us. And that's what I want to talk about. The bond market, the largest market in the world, 10 times larger than the stock market. That's very important. That is looking good in our favor for seeing a short squeeze. What's happening to the markets? Well, the markets are coming down in a substantial way. You're talking Europe, you're talking China, you're talking America, because these hedge funds, they're involved on the global stage. It's not just about us, it's about the world. And throughout the whole world, things are not looking so peachy. Liquidity is being restricted. Mortgage rates have went up 3% in the last 6 months. Mortgage rates, loans for hedge funds, just capital in general, is become more scarce and harder to acquire. Now, we're going to go over this. I'm going to show you guys all the data here, and you guys can come to your own conclusions. Do you want to be the one to FOMO into the stock when it ultimately does rally and when we get the next big catalyst to set this thing home? Or do you want to play the long game and make the most amount of money? Obviously, not financial advice, not a financial recommendation. Have to put that here in this video because nothing is guaranteed in the stock market. But what I know is what I know, and what the data is telling me, it's a simple fact, is what the data is telling me. I'm not here to speak out of emotions or be your cheerleader. Now, we got a lot to get into, so let's get to it. Now, before we get into all of the information here in this video, I want to make it crystal clear. I do not care if you buy, sell, or hold AMC stock. I am not going to tell you to do anything with your position. And why do I not care if you sell? Why am I not sitting here saying you better not sell your stock? Well, because I actually want people to sell their stock. Hear me out on this. This is exactly how you should feel. When a stock has no attention or a lack of attention, and then people start to like it again. Look at all these runners, SST, look at Ater, all these other stocks. It was because nobody gave a shit about the stock first, and then everybody started to care again. Look at it like this. The more people that sell out now, that's going to be dry powder heading in when conditions are primed to see the Moass. Now ask yourself, do you think conditions are the same or better than 08 and 09 when Volkswagen, Overstock, and a load of other stocks were squeezing without even retail activity? There was hardly any retail activity back during those times, but those stocks squeezed massively. Even a German billionaire killed himself because Volkswagen squeezed. Now, I don't want that to happen. Definitely not wishing that, but you guys get the point here, right? There's more dry powder to head in at the right time. Fun fact, AMC stock was searched more than the word stimulus check in 2021. Everybody was searching about stimulus check, at least the people that I knew around me. Everybody wanted to know, when is that next stimmy coming? The fact that AMC stock was searched more than the word stimulus check, I think shows a lot. And the price action that we have seen of AMC, especially as of late and this last rally, goes to show exactly that. People go in waves. They go where the attention is. So when the stock is really not being talked about too much, there's not a huge reason to FOMO in, then the stock will tend to go down. Once those catalysts come back, you have all of those people that were looking into AMC, that previously owned AMC and sold out, that flood back in. And that really hits the demand part of it, where demand skyrockets and supply cannot even catch up. Hopefully that in a nutshell made some sense why it should actually be encouraged to see these kind of things. And a matter of fact, I don't take trades when momentum actually starts, or at least is like mid or end stage, because one, you never know, and two, you get the best pricing when people don't care. And there's many examples of this, but think about Mullen, a stock that I started to talk about when it was about $1.10 per share. I bought that stock when it was 70 cents per share. Why? Because nobody was talking about it. It was beaten into the ground. It has a business behind it and had the potential to become a retail stock. And what happened? Bought in at 70 cents. It's sitting at under $3 per share, just under $3 per share last time I checked, and it got retail attention. I made all the money. People that bought in higher, unfortunately, probably did not do also well. If you bought in at the 4s, you're probably not liking your decision, right? That's going to be the same case for the people that FOMO into the Moass. Don't be the one to FOMO in. Be the one that has patience. Like I said in the beginning of this video, riches will come to those with patience. It's some biblical shit I'm hitting you guys with. I hope you guys know this is as old as the dirt you are watching on. Standing on or sitting on, whatever. You guys get the analogy there. Now let's talk about the actual liquidity situation. So, what's going on in the world? Look at the bond market. If you guys have not noticed, bonds are going batshit crazy right now. The US 10-year Treasury is at 2.82%. So what does that mean? That means when yields go up, hedge funds, money managers are actually selling out of bonds. That drives the price down. And the best way to really monitor this for your guys' self is TLT, 20-year Treasury bond. What has been happening with this? What has been happening? What does this chart show you? Straight down, virtually straight down. Now, what's actually happening? The price is going down. So hedge funds, their value of their bonds is getting destroyed, beaten into the ground. So what is their portfolio values doing? They are going down. Now, if a hedge fund needed to sell some bonds to maybe cover on a short position, they're going to be taking massive losses. In the meantime, they're still taking massive losses. It's going to be less collateral that they can actually put up. That's a big deal because the bond market is about 9 to 10 times larger than the stock market. So a very big deal. And this is happening with corporate credit as well. It's not just government bonds, it's also corporate credit. Why is this actually happening? Well, long story short, it's really inflation. Why would you buy a 10-year bond that pays you 2.82% when inflation is 8.5% year over year? You're losing about 5.5% to 6%. You would not do that. So on that aspect, liquidity is already being restricted in a very, very dramatic way. Let's take a look at 08, 09. Where were the bond yields at? They were at about 3 to 3.5% when shit really did hit the fan. Right? They went from 2.22% all the way up to about 3.5%. So you've seen a relatively the same kind of move, right? But the bond yields are going to go higher, and this effect will continue to happen. And I hope you guys are starting to put some of the dots together here. But what has also happened in the stock market? Well, the stock market is down, and it's starting to come down. If we really start to break to these lows that we've seen in March, or even down to 400, or even lower than that, once earnings come out starting next week and the next 2 weeks after that, you're going to get the largest companies in the world, your Apple, Microsoft, Amazon, Google's, reporting earnings. If their earnings are no bueno, not good, you're going to see these stocks come down in a very dramatic way. And let's go ahead and take a gander at the S&P 500. What is actually in the S&P 500? This is the benchmark for the top 500 companies in America. What are the top holdings? Apple, Microsoft, Amazon, Tesla, Alphabet, aka Google, Nvidia, right? These control a vast majority of the broad markets, and this is where the money actually is right now. Hedge funds see this as a safety play, when in all reality, it's not a safety play. These stocks have had major demand over the past 2 years because of funny money. In the case of Apple, I am very, very bearish here in the short and mid term because they've had all their demand pulled up 2 years. Everybody got free money. They were stuck at home. You were dumb to not get that new, AirPods, iPad, iPhone, iMac, whatever you guys wanted to get, right? You were dumb to not do that unless you were investing that money into stocks. In that case, you were smarter than the average person. But even Apple's 7% of the S&P, that's the most widely held stock in the broad markets, in the markets in general. So wait, what does this all mean? If the corporate outlook starts to get worse for these largest stocks in the world, stock market's going to come down dramatically because the stock market trades off of two things. It trades off of, well, I guess three things: momentum, fear, and greed, news, and fundamentals. What is the most important thing? Fundamentals. If the markets are not supportive of the fundamental valuations, they will come down or they will go up in the case of the markets are too sold off and the fundamental valuations should be much higher. You guys got to remember, these are businesses. Once their revenues come in bad, which they will throughout 2022, there's no doubt about that, then you're going to see a lot of pain in the markets. That's why right now I'm actually holding quite a bit of cash. So you have that going on. What's going on around the world? You have COVID in China. You have Russian investments that just went to absolute dog shit. They're worthless. Europe likely in a recession right now. So it's not like one economy here or there, like China's going to save the day. China's been in its own shit show for the last 6 to 8 months now. So what does this mean? Liquidity is being restricted. Interest rates are going up. So it's a lot harder to service those margin calls when they come. After all, if you have $1 billion margin call, your bonds just lost 45%. Your stocks just lost, let's call it 45%. Well, you have 45% less capital to service that margin call. That means margin calls will come a lot quicker, just like in your portfolio. You have, say, $20,000 in margin debt. You have a $40,000 portfolio. Well, let's say you YOLO'd $20,000 on a trade and you lost. Well, all of a sudden, you're going to be at a margin call or very, very close. Same thing happens, but on a bigger scale with the hedge funds. Their values go down, which is happening. Then you get closer to that margin level. Now, take for an example, a hedge fund has an over-leveraged position in AMC stock, which is likely most hedge funds at this point. What happens? That stock gets a catalyst. It starts to rally, just like Overstock, Volkswagen, these other stocks from 08, 09 short squeeze era that did the same thing. It starts to rally. Well, those hedge funds start to lose on that side of their portfolio as well. So then a lot of covering starts to happen at a very, very aggressive pace. But you might say to yourself, well, over the past year, that has not happened. What was different in the past year? Let's go back to the bond scenario. Pull up the last year. Bond rates were 1%. It was funny money. It was cheap money. Look at TLT. The bonds were trading at a high of 175, usually in a range of 160 to 150. Now they're at 120. That's a substantial loss hedge funds are actually taking on their positions. And to get paid out the full principal amount of a bond, you have to hold it until maturity. So if you want to sell it on the open market, you're going to take a massive loss on that. And most hedge fund portfolios are split up 60% stocks, 40% bonds. So it's almost a 50-50 ratio. Some hedge funds are 50-50 ratios. So you're definitely seeing a lot of pain in the bond market. Starting to see a lot of pain here in the stock market. And that is a good thing for AMC stock. I don't want anyone to get that confused. Now, this would be a totally different video if AMC's business was not getting better. If AMC's business was actually declining, would be a totally different video here. But you got the situation for a squeeze getting better, the business getting better. Yes, the stock price needs to come down, right? I've never said that it wouldn't. 6 months ago, I said expect AMC stock to come down before it ultimately does squeeze. That's just the nature of a market crash. That's the nature of a pre-run up into a short squeeze. These short squeeze, look at Ater, look at SST, look at these other stocks people are trading. They were in the dirt before they started to rally. So all of this is very important to understand. You have to look at the macro here. What is the state of hedge funds, not what is going on with the price action of AMC stock. The price action is virtually worthless. But what happened today with the price action of AMC stock? We were down 2.75%. Now, one, let's just call him uneducated person, might say, damn, AMC stock was down 3% today. Today was a bad day. Well, that's bullshit, because look at Snapchat, down 4.35%. AMD, down almost 5%. DraftKings, down surprisingly only 1.55%. Square, down 3.82%. Fubo, down 4.45%. MindMed, down 2.72%. SoFi, down 4.6%. Lucid, down 4.6%. Affirm, down 8%. PayPal, down 2.72%. Mullen, down 8.75%. Some other stocks as well in there. You guys get the idea. I mean, PayPal almost fell more than AMC. Put that into perspective for me on how today could be seen as a bad day. We are seeing a little bit of a move back up, about 0.17% here in after hours. So all in all, today was a very bullish day. Do not be confused on that. And if you take a look at some of the headlines you're seeing and what actually happened to the broad indexes, Russell 2000 down 1%, NASDAQ down 2.14%, S&P down 1.21%. VIX up 4%. But look at some of these headlines. Amazon CEO Andy Jassy says cost from pandemic, inflation, and war are too high for company to absorb. That is a hint to, hey, these earnings coming up are not going to be so pretty. Something you want to take note of. Those kind of things will draw the markets down, leading us closer to the Moass. Sure, could AMC fall in the meantime? Of course. But the lower AMC falls, the less risky it is to actually get into a position, average down, and to ultimately get the best price to see the Moass. Obviously, like I said, none of this is financial advice. I think it's common sense for somebody like me that has been in the markets for 5 years, and I want to put that perspective out there to reach as many people as possible. And once you get the information and the perspective and the opinion, you can come to your own conclusions on what do you think. Do you think I'm full of shit? Do you think I'm clickbaiting you, or does this actually make some level of sense? Think back to history, 08, 09. These were the same conditions that we are heading into as we were in 08, 09 when there was a lack of retail attention. I think that says a lot because retail is very powerful. And if you've seen that back then, what do you think is going to happen when you give us the same conditions now? A stock that was searched more than the word stimulus check in 2021, manipulation by the hedge funds, the synthetic shares that are out there, all of this information that you guys already know, put us into that scenario, and I think you'd come to the conclusion that we're getting more bullish every single day. And the lower the stock goes, the more bullish I get because, like I said, there's less risk on those new positions. Now, let's talk about the Ortex data, and let's go ahead and wrap up this video because that is what you guys need to know. I cannot give you guys a date. I cannot give you guys a price. I cannot say if I am 100% correct, but data does not lie. Do not listen to people with emotions. Listen to people with facts here. If they cannot sit here and show you a chart and show you a fact on paper on the screen, then they're full of bullshit, and that's the best way you guys should look at investing your money in AMC or any other stock, or just taking in opinions. Not all opinions are good opinions if they're speaking out their ass, and we've seen a lot of people doing that recently. Now, short interest of free float 19.74%, current shares that are so short of 101.73 million, cost to borrow max of 5.84%, utilization of 100%, and days to cover sitting at 2.42. What is the options market looking like? It's looking like 0% positive order value. 3 orders totaling $217.05 thousand. You didn't see any calls come through. You've seen a put position for May 20th, another one for April 22nd, another one for April 22nd for the $20, $20, and $17 strikes, worth about $34,000 and $119,000 a piece right here. So come to your own conclusions. What do you guys think about all this down below in the comment section? I would love to hear your guys' thoughts on this information. And this video had to be made because I've seen a lot of people talking very negatively that have no idea what they are talking about. So remember, it's not about the stock. It's about the macro environment. Are we getting closer to that squeeze type environment or are we not? The answer is overwhelmingly yes. At the same time, it's not only the markets crashing, the bond market coming down, the world heading into a recession. It's not all that. You do need to see a catalyst with AMC stock, but we have so many catalysts. I can make a whole video about it that are upcoming into the future. Think to those buyout catalysts, right? AMC acquiring stakes. If I were to put my money on a catalyst that caused the Moass, it's going to be AMC acquiring a really good stake in XYZ company. Now, that's all I can give you here in this video. I apologize for a longer video. I do somewhat apologize for my attitude here because this is not the most pleasant video. I know I was throwing shots at a lot of people, but they need it to be sent. So hit the like button, subscribe to the channel, comment down below, let me know your thoughts on this. Let me know if you have anything else to add to this that is contrary to this. Provide some facts, some due diligence, something to add on to this video. If you guys want to get those free stocks, down below in the description. If you guys want to come trade with us live in real time, link down below in the pinned comment. Thank you for watching. Enjoy your weekend. The stock market is closed tomorrow, but I will see you in the next one.